Oh, we have a lot to go over here. Bitcoin hitting that DTL downward trend line, copper making a major reversal. You have the S&P as well. We're going to go through here, but let's just jump into it. Super technical, super actionable tonight on how you should be trading this market. I think a lot of people are missing some things here, and we're going to go over it. You have a DTL here, downward trend line. The easiest way and the safest way to do this is clone them. If you clone them, you drop them in and you see where they fit. You will usually see some kind of pattern. You can see the pattern here, the low end and the high end. In these kinds of bull markets, and yes, you are in a bull market despite how your trading is going, you're going to see people wait and start buying these breakouts. How's that going? Not very well. You buy support and you sell resistance. Eventually, you will get what we are referring to as a breakaway bull market. You don't have one of those. You have a bull market where you're in a trading range more than anything in the consolidation phase, as you have a ton of uncertainty going on out there. But understand where you're at. We had a really nice trade in the community on MSTR. We bought it right down here at like 150s, 151. And we were just dumping it on the way up, scaling out into it and scaling out into this move. Now, most people will just say, oh, I'm just going to hold it. This kind of market that you're in, I'm just going to point this out. The money is made in trading. You can have a core position, like let's say you own 1,000 shares and you trade half out and then you hold half and then you keep adding and trading the other half out over and over again so that you're trading around your core. You can do that. I'm pretty much on swing trades and all or none in regards to things like this. So as it rallies up, I'm trying to get out into resistance. If it breaks over resistance, great. It'll then come back, retest eventually, and I'll find another spot in. But something like this, it's really relatively simple. As it was trading up here and then the next day here, we're scaling out into it, so we're not waiting for that. I would suggest that you do the same in this kind of market. Between non-farm payrolls this week and all the other things that you have going on that no one's even talking about, I would be really very apprehensive here. There is a lot going on out there that we are just not really focused on, and a lot of people just are not paying attention to. So I would just suggest that you understand there's a lot out there. So we'll start here. For example, Powell comes out and speaks today, and I've been marking this level off and been very critical of this level, which is exactly where the Fed came out and on that February 2nd, and take a look at this level that you held today. And again, this is really important stuff, so you might want to watch a couple pieces of this. But you see that level right there? You hit there. You're probably going to want to watch a couple of these pieces a couple times. And I try not to do that on weekday videos, but a lot happened today. As you're hitting here, you're unable to break it. So you have a net buyer here. Now, that's great, right? Because you jumped up. But you have the end of the quarter right now. So you have mark to market, meaning funds go out there and they buy their stuff to, quote, market to market, so that people will look at their performance on the quarter and everyone will think that they're great. That's why when you look at these things after hours, you'll see this 4 o'clock kind of move, and then all of a sudden you'll be like, well, why did we drop? Well, they got their mark, right? That's why this goes up like this, right? They push it up. Everybody knows this. They push it up end of quarter to get their mark. Now, can you trade off of that? Sure. You could have, but it is what it is. If you don't know that, then you don't know that. What I didn't like was this, and we should probably talk about, this is the move that you really need to watch. So if I was an S&P trader, the one level that would concern me is right here. And the answer is, well, people are going to say, well, why? We just held there, right? When you go and take a look at this from that area, and again, if we take a look and just drop that right there, you're right around, again, that 2 o'clock area. It's tighter on the futures, obviously, because this is an ETF. But if you take a look at this, okay, great. We got right back down to there. You'd come here, you'd look at this again and go, what's the problem? We got into this area and we held. It's not that it's a problem. It's a problem is that you don't know that you're really going to hold there yet because you had other underlying circumstances, meaning markets are going to do everything they can end a quarter to try to mark you higher so that their performance looks better because the majority of people are net long. Exactly what happened. It's not a coincidence that you have not been higher since that mark. Your real move is going to come tomorrow. Now you have that, and you also have China that's now pausing, and we should probably just start there as well, and then we'll circle right back. But let's just talk about copper. And I saw that Yardini made a comment. We're not going to have time to get into that tonight, but maybe I'll get into it on Tuesday night. And his comment was relatively simple. Just watch copper. And we can see that right in here with copper hitting this level and hitting here, and then the rejection. A lot of people were looking at this. It's funny. We just had a conversation about this before I even started tonight's video. I was just making my notes. I don't care that we're here. For those that are curious, I don't care. People will say, oh, well, we closed here and you closed there. Now, you have people that actually bought copper significantly higher, and copper failed to break out over major resistance. That's what happened today. You can polish it any way you want it, but this is what happened. You tried to get over that 475, and you got completely Mutombo'd. Rest in peace, Mutombo. And now what you want to do is you want to pay attention to that, right? You want to understand that this is a demarcation line. Does it mean that you're never going to break through there again? No, but this becomes a place of interest. If I hit here once and I hit here twice and I hit here 3 times and I don't break it, if I'm going to pretend that it's not happening, well, then I'm just an ostrich. And ostriches don't trade. So I don't want to be an ostrich. I want to know what's going on and I want to see if it's going to affect me, yes or no. So then I would go and take a look and look at the moves and say, did these moves move more than, the average price of copper? And then you would go here and go, well, we closed at 118, we're at 115. Then you would go look at FCX, and you would go, okay, well, we closed at 51, we're at 49.90. Okay, so we're down about $1. It's not really the end of the world, is it? Then you go here and go, wow, this one was basically flat. So what we've done there is a couple things. Number one, we've established that copper, yes, it's off 90 bips, but we did try to break out and we were unable to. The other thing we established out of the 3 big names, which one would you look at? You would look at TECK. Why? Which one's up? Okay, that wasn't up. SCCO. Which one was up? TECK, right? So you're always looking for relative strength. So it's something else that you might just want to remember there. You want to see what's leading. Let's get back to it. So do we have a breakout? Is this what we're looking for? Is that all-time high close? Everything's good, right? Because we closed here. Or did they just mark us to market? I think they marked us, is my personal belief on this, because for me, I need to see that now. So what I want to see is show me. Get me over that 4 o'clock level. Get me over that spike. Because this was the easiest thing in the world to short. Just FYI, all you do is just wait for 4 o'clock, end of the quarter when they run it like this. And then at the end of the day, they just start selling it off. You can even do it with index options. Some places will allow you to sell index options later. 405, I think it is. So, but if you were looking at this with the Qs, it's very simple to do. You're playing those zero-dated options. But anyway, if you're looking at how this is acting, this is not acting like, oh yeah, we're just going to have follow through. No, this is called mark to market. They do it all the time. My larger concern here is even when we look at FXI, which longer term, I really do like these names. But I think you have to understand where you're at. So you have a breakaway market. Now, you didn't have it here, but you also didn't have the catalyst till here. So this is when we get the catalyst. And then everybody goes home and they think they're okay. Then the next day you get the catalyst, another catalyst, and you're up here. What's happening is you're having a lockout rally, meaning US is being locked out of this rally. So if you take a look at this and let's take a look from this point on, from when that news hit to here. And what we'll do is we'll just look from that close to where you're at. You have a 15% move on China. Out of that 15% move, you would have to say that from here to here, 5.8% of that you don't get to participate in. And then from here, from open, 4.7% of that you're not getting to participate in. So out of that 14%, we're not participating in 11% of that if you're just US equities and you're trading at 930. You have no access to that. So you miss 75% of the move. So you come in again today on Monday and everybody gets giddy because this time you're prepared because you know it's going to happen. And then what do you get? Boom, Mutombo'd, right? Rest in peace, Mutombo. So when you start to see this is a pattern, and this pattern, very specific, you have the bar that breaks, you break above it, and then you do the gap up, and then the fade. This is a very specific trading pattern that marks tops. So people don't want to hear it. I get it. That's fine. It doesn't matter. It's there. And I can show you another example of it, where it was funny. I showed the same thing before. See the doji? See the breakout of the doji? See the gap up? See the higher push? See the reversal? I remember when I was in the community and I was telling people that were long copper and gold and silver. I'm like, yeah, you have a short-term top. It's in. And they're like, no, it's going to the moon. Moon, forever gold. Yay, gold. And then it just went sideways. And while there was a lot of angst, eventually, yeah, it's going to get it together. You're going to consolidate. You're going to break out again. I don't think that the copper or the China trade's over. But you moved 15% on an index in 5 days. So you got to think there's going to be volatility, right? And now you're going into this holiday with it. So when you see patterns like this, let's just show it again. Here's the doji. Here's the breakout above the doji. Here's the push, right? Closing at the high, gaps up. Everyone gets giddy. Got to get in, got to buy gold. Then you have the reversal. All their hopes and dreams are smashed, living in the basement with mom, eating Hot Pockets, right? Okay, it's the same pattern, same soup reheated, right? Look, it's a doji. Then you push. Then you gap up, and then you reverse on the gap up, right? It's the same exact pattern. No, this time it's not different. If you take a look here and you go look at MCHI, it's the same exact pattern, right? I was just showing large cap, but here it is. Like, there's the doji, there's the gap over the doji, there's the other gap over where everybody's got to get in, giddy, and guess where they are again? In the mom's basement eating what? Hot Pockets. So when you start to see this kind of thing over and over and over again, and you get Mutombo'd, rest in peace Mutombo, you want to watch this stuff really closely, right? You don't want to tell it what it's going to do. You want to understand where you are in the food chain. So you start looking at stuff like the RSI. People say RSI doesn't work. I can show you 100 live videos of it working, but to each its own. But here you are, 87, right? Do you really get goofy up here? Probably not. Then you go take a look at the weekly. Do you really want to get goofy here? No, but you can always go higher, right? I mean, just because you're up here doesn't mean it can't push. I think you just want to see how we act over the holidays. What got me about it was the gap fills didn't hold and they should have held. And I'll just walk you through this. Now, again, I spent a lot of time fundamentally walking through why I think longer term this can work. That's on Saturday's video, and I will post it at the end. What struck me as interesting is the lack of interest in the topic. Whenever I have a topic that I post on Saturdays and I don't have a lot of interest, I had interest but not a lot, it's always telling to me because it means that trade's not done. That doesn't mean technically it can't pull back. But when you have these kinds of gap fills here, now watch that mark when we drop here on a 1. This is why as a trader, if you are a short-term trader, even if you're a swing trader, you always mark the open, high, low, close of the previous day, right? It's just a good idea, something you might want to consider. You see the high of that level right there? And then we would go to here, and we would just watch how that acted. And then once you got there, that was it. And this kind of stuff is really telling. Now watch. Come here and mark that level. And you see how you acted at that previous close? Go to Baba. Same thing, okay? Here's the previous close. Bonk, 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 right? Mutombo'd. And then here you are, tries to get through, Mutombo'd again, rest in peace Mutombo, and here you are after hours. And now everyone's going to go home and say, oh, I'm not worried at all, okay? And then you're going to go here and take a look at JD, and then you're going to see the same thing. And when you start to see these patterns, you can't unsee them, right? That's why you always do the same thing over and over and over again every day, because if you do that, then you'll see patterns, right? Look, there's the close. We touched, we held, it was there. I actually watched this and added to the position that I had. I used to have a swing trade in this. I started selling it this morning. Actually sold some pre-market. You could tell when you can't get above the 4 o'clock open and it's a Chinese name. I mean, like, no one's going to ring a bell, man. So it was pretty obvious that the kind of top was in on this stuff. But then again, if you just do yourself another favor and you just mark off the open, just watch how you act at the open, right? That's all you have to do. Like, don't overthink it. If you're new at this, open, high, low, close, previous day, start marking the open, and then constantly just be marking the highs and lows in the day and just start developing those patterns. Your life will get a lot easier when you start looking for patterns. One of the core things that, and when we talk about things that people are missing out there, the idea that people didn't know to short Micron today was like kind of crazy to me. Samsung came out and put on hold 2 of their facilities that make analog chips, and they also do some high-end chips. Let's just mark this off so you can see that level. I actually bought the 110s the other day, the puts, and shorted stock. We came in long and did really well, but it just couldn't get over that 112. It was a real pickle. And then you just started, getting rejected over and over here. But what we did with this trade, it's really simple. I look at a 1, a 5 in the daily when I'm trading, but you'll see this pattern. You can't really miss it. So what you'll see is the breakdown that tries to rally back up, and then boom, it just implodes. Now watch this on a 5-minute chart, and there it is. I mean, it gets to mean what someone likes to say is absolutely glaring. Once you see these patterns over and over again, guys, it's really hard to not see them anymore here. It really is. Like, no matter where you go, you just start seeing them, and that's really important. Like, I saw 3 of them already just looking at it. Down, up 1, 2, 3, down, falling 3. So I keep getting asked about books. You need to get the Encyclopedia of Candlesticks by Bukowski. He actually breaks down percentages, even as a site where he did it. This is like a layup. Like this pattern over and over again, it's literally a layup where you're down, you try to rally, you have 3 up, and then you encapsulate those 3 on, and you need all 5 pieces of this. And when you have it, it's pretty much a wrap. Here, watch this play out. Micron, you're not even able to stay up. My first inkling on that is to buy puts on Micron, the 105s, and just give it a minute and see if I'm right or not. I think Micron's in a lot of trouble here. And that's a long way down. So I think it's worth the risk. 95, 96. We're at 215 on those. I paid $1.80. Trimmed a little, not a lot. 210, paid $1.80. Pulled something out. It's starting to move as well. Back to break even on those. I cut those in half. what's left of them. I pulled something out when I was up 20%. I cut them in half. 210 on those. That's the bar I needed. Perfect. Trimmed into that. 225. This micron trade's gonna be a monster. $3 on those puts. Trimmed more micron puts. I don't want to be around for a big bounce up here, guys. I want to be able to put more on if I get a big bounce. Trimmed more of the micron. So the rest of these now are break even. So we had some really good trades this morning. It was really just a patience game more than anything. Now, it's really important to get that. If you like when I do those, I can break that one down line by line on how we did it. What I think a lot of people are missing here is a lot of the data. So we're going to jump through some of the things that happened today that I think a lot of people missed. We're going to start with Powell's speech because I think a lot of people did get that. But you see this huge drop right here. And let's go through Powell's speech and what was said. Now, a lot of people missed this, but what Powell came out and did today was really put a damper on how many cuts there were going to be. So the current target rate is now 475 to 500. This is our current rate. This is November 7th, CME Fed Watch tool. This is free. Anybody can go there. There's a 100% probability that they are going to cut rates. And then you can see right here, there is zero chance they are not going to cut rates. There is now a 62.9% chance that you are getting one rate cut, and it was 46 before he spoke. It was a 50.3% chance that you were getting, and that dream is dead. And now what is happening is it shifted. Once that shift kicked in, we saw selling, but let's go out to December. Now, in December, what we saw was right here. And I think that this is really important for us to get. Zero on 450 to 475. There's no chance they're not cutting in December and no chance they're not cutting in November, okay? 425, 36% chance of 425. It went up, okay? 400 to 425 stayed the same. But 375 to 400 went from about 30% to 15. So the amount of rate cuts that were taken out of the market, you could say it's roughly 33 basis points, but really the chances of getting 50 and 50 now, okay, which would have put you at that 375, is like 15% versus roughly 30% before you started the day. That's a huge difference, and it scared the market because they're not getting the cuts that they think they're going to get. And I do think that he's right to an extent. I don't really like the way he does this, where you have a Fed meeting and you say one thing, and then you do this and you say something else. But I do understand that I think the market got way ahead of itself with these types of cuts. It doesn't matter. It is what it is. But this is one of the reasons why we were weak today. Now, we had this window dressing, which gave us this 4 o'clock close. And at the time of recording this, it's 6:11. You can see what's happening after hours. Once the futures market opened again at 6 o'clock, what's happening? We're just dropping here, okay? And you have some other issues that are going on. You're going to want to watch this line very, very closely here, okay? Definitely going to want to watch this tomorrow, that 12 o'clock level. And you're certainly going to want to watch, I'll drop it as well, this level right here. This is your absolute levels right here, 487.55, but you're really going to want to watch that 488.46. I mean, that is like the top Matumbo level that you have to watch right there. So you put that guy right there, and then you could just put another one. We could just put another one like right here and just watch them there as well. But these are the levels that you would really, really want to watch tomorrow. I think that they are critical, and I would certainly suggest that you don't have to put your own little Matumbo there, but you most certainly want to watch those levels. Now, just as everyone was getting giddy with the China names, and I am as well, and I do like this trade longer term, you just got to realize Shanghai stock market will be closed from October 1st to October 7th. So now you're going to have a lot of people and a lot of uncertainty on how this is going to play out. And now people are going to have time to digest this. And a lot of people, quite frankly, aren't even aware of this. And there's another piece of news that I don't think a lot of people are aware of, and it really was the reason we did the Micron trade. Let me show you this. Now, we're all aware of this piece where Friday press, NVIDIA, Beijing stepping side pressure to buy locally produced artificial intelligence chips instead of NVIDIA because they're going to use unicorns and rainbows instead of NVIDIA, apparently. Okay. Samsung is reducing operations at its semiconductor industry in South Korea because sluggish orders. Samsung reducing operations, sluggish orders. Like the things you don't want to hear when you're a semiconductor company. And there they are. Widening losses. You just don't want to hear these things. Unidentified industry sources, some facilities at the P2, P3, companies, campus south of Seoul, shut down. Not slowed, shut down. The idea that semis did not fall out of bed today was shocking to me. Now, Micron and DRAM fell out of bed, and it's really, again, shocking that we did not see semis worse. I'm really curious how they act tomorrow, and I'll show you a couple charts here. Before we get to that, this other headline I think is really important. Why is nobody talking about the fact that we could just lose all the ports and this strike, we're acting like it's nothing? How is this going to go for retail when they don't have anything to sell? Like this is a real issue. And we've been talking about this a little bit last week, but now it's starting to really pick up where these guys are getting on TV and saying it's going to be a problem. Now let's look at a couple charts here so that we can just understand where we're at. The number one chart that I use to just determine what's going on in the world is right here. I use the Qs divided by the SPY. And what I like to do here is I like to look at this and I like to just drop in a 55. And this always keeps me sane. It always lets me know, should I be looking at tech or should I not be looking at tech? And this is going to tell me very clearly that if I am below that 55, I do not want to look at tech. Now, I just got over, so I have to watch this tomorrow. I can get rid of this volume. This has served me very well throughout the years, and you can go and look at this yourself. Anyone can do this. It's a 55 divided by the SPY, and then all I'm doing is, am I up or over? And if I'm underperforming on an institutional level on this, I have no interest in being in tech. I will trade it, I will whack it around, but long-term buys where they're just buy and holds, it's got to be specific. Like there's a couple trades that made sense. For example, like Oracle looks great here, and it's setting up very, very nicely, but there's reasons for that, right? But that's the first thing I think you have to look at. The second thing is the sell. You need to hold here. You need to watch this tomorrow, and we got to make sure that we are staying above 225. The biggest concern I have on a technical basis, besides looking at these China names, and we'll go through a couple here, but if I look at something like this on the video and I see these four peaks, and again, it's my job to talk about what is actually happening, not what I want to have happen, not what I hope would happen, not what's going to fit my my portfolio, but what's actually happening. When you start to see this and you understand that you have the same exact pattern here that you have there, and I understand this, that we're not powering our cars with solar. I get it. This is a real, I'm not going to say it's a real company because people are going to get angry at me, but there's a huge difference between Tesla and NVIDIA. It's enormous as far as the PE here and everything else, but a pattern is a pattern, and I'm a pattern trader, and you know that if you've been watching this. So when I see this kind of stuff, you're starting to wedge me in here a little bit, very much like I got wedged in here previously. We got wedged in and then it made a decision, and you can see that wedge right there, right? 1, 2, 3, and then you have those higher lows right there, higher lows, and you form this wedge, no different than you're forming here. You have to pay attention to this stuff because as NVIDIA goes, as everyone's been saying, goes the NASDAQ. The other thing I want to make really clear is these names like JD and all these names, I'm not suggesting at all that this move is over. What I'm simply suggesting is 14% of this move happened over a very short period of time. Meaning, if I go back and look at JD, PDD, which got all kinds of upgrades today, by the way, by all kinds of firms, BABA, all these got upgrades. And then we go here and we take a look at FCI, for example, and we realize that the anchored VWAP of the pandemic is exactly where you stopped on FXI, and you got completely matumboed there. That might be a place of interest that you just want to put on the brakes and see how it goes. That's it.